Hey, welcome everyone. Well, glad Robert's here is ready for another great MT Live. And this one, if this is your first MT Live or new to trading or relatively new, this will be a great MT Live for you to have been exposed to in the early part of your journey to trading or investing. And I wish something like this was available when I first started out many years ago. The path most of us take are the one that's filled with these trading illusions that we call indicators. Um, Beyond indicators, there are things like Fibonacci retracements based on some mathematician that did something in Italy. It's probably measuring the slices of a pizza pie. I don't know. How is this related to trading? I can only imagine it had something to do with finding the Holy Grail and perfection, trying to ensure that there'll never be a loss. When you narrow things down to within a decimal point, you're pretty damn exact. And so through the indicator-based methodology, or whether you're using things that really go into the dark side of Elliott wave and Gann analysis and many other things that you could possibly get deterred from, that matters. And what matters? What's on the damn chart that we all look at? Why are there so many different ways of trying to manipulate that data to try and figure out whether it's going up, down, or sideways, or where support or resistance is? Maybe because of marketing, where someone can now sell you hidden support and resistance, proprietary levels, um, indicators that are optimized to show you when to press the button. And there's so much of that out there that it's hard to sidestep it. I think it might be impossible. I know it certainly was for me when I started out because, you know, there wasn't anything out there. Well, I shouldn't say that. I shouldn't say that. There was the common sense out there. It was a giant book about that thick, right? Edwards and McGee on technical analysis. I don't think there were any indicators in it. It was a giant book. And so from there, it's like, could it be that simple? Now they don't get into the type of the things in the detail that we do, but the foundational information was there. Support, resistance, this is a trend. But we all think it has to be so complicated. And we get into trying to perfect things, which we'll get into and show you different information. And hopefully through this MT Live, you can potentially, at least we'll give you the thought to potentially sidestep some of that. And if you are using some type of indicators on your charts, and put a yes, if you have an indicator on your chart today or multiple indicators on the chart, let us know. If you know, you don't have to be concerned that, oh, Greg's or Dan's going to say, oh, you shouldn't do that. It's about understanding that none of us, I think, can sidestep this thing. Yeah, we'll talk about moving averages because they're a type of way of manipulating data. We'll talk about. That being said, if you can um, find the courage to remove that stuff from your chart, and the reason what does it have to do with being courage and being afraid? Because in a sense, you feel like you're trading naked in a sense of if you've been using all of these different indicators, even though you're struggling and losing, you don't know what else to do. And through feeling exactly that way many years ago. It was like, this ain't cutting it, and that there's that saying about doing the same thing over and over again and being crazy and expecting a different result. How long can you do that before you finally either throw in the towel and say, this is impossible? Or what I did was I removed all of those things from the chart, and things started to get clearer. So let's review. Let's do it.
All right, awesome. Good afternoon. Yeah, I mean, you said a lot of stuff there, but that I could respond to, but we'll do it throughout the thing. But uh, I'll just answer one of them. I think, Greg, that what people have to learn to get naked and take them off is it improves their decision making process without them. Right now, they think I'm talking general, they think, well, I need this MACD to confirm my belief of the charts. So two things. Number one, no, you don't. If you have an objective systematic approach like we do, which is a slide. And number two is they have to have a number of experiences to say, well, wait, that worked and I didn't get my signal. So what happened? And I think that's where you learn to take them off. Is that correct?
Well, at the beginning, I had no idea what
Okay.
to do. Right. I
Well,
think most of us, you know, are that way because trading and investing and using charts are something new to us. And so we don't know what to do. And so we're inundated with, squiggly lines and indicators and such. And it's like, well, if that's what everybody's doing, that must be the way. Otherwise, they wouldn't do it. So, that kind of reasoning leads us to, hey, I got to put these things on there too. And then the path evolves to, well, common sense says, well, it didn't work. It didn't work that time, and it worked that time. And what
that,
was the difference? And that's kind of the path that we all go on, is trying to figure out why things work this time and why they didn't work the last time, and why did it work on IBM but it didn't work on SPY.
that's what
And
I'm getting at.
it's like
Exactly.
such a struggle, and as you're looking for the answers. And so it's like, I must be using the wrong settings. It must be different type of indicator, or it must be something that needs to be tweaked. And, you go to different webinars, and if you've been there, share your thoughts, because others would be appreciative to know that, you were in the same boat as others, because I think it's unavoidable to go down that path.
All right, let's continue. All right, so you need a systematic, objective approach, and those aren't just arbitrary words. Those words apply to anything that you want to do and succeed. Being an architect, a doctor, basketball player, race car driver, a trader. It's like, how do you consistently make money? We come to a poker player. This is our one sheet summary, which is a summary of Greg's complete course. We are looking at price action. Why? Because candlesticks and arrangement of candlesticks and trend and these other concepts is visually telling us what the sum total market participants are reflecting in supply and demand on that time frame and whatever friggin' instrument you're trading. I just typed here, Bitcoin's ripping because out of my left eye, I got a 15-minute chart of it. And,
So,
got 6 screens and I can tell you what's going on with a lot of stuff just by looking around.
Dan, you said a key point that I don't want it to be missed. And it was, whatever the friggin' instrument is that you're trading. And the
Right.
key point of that is, when you apply foundational information, it doesn't matter what you're trading. An uptrend in Bitcoin is an uptrend in Apple, is an uptrend in XYZ. Now, how you define that is what brings clarity. If you try to define that with something esoteric, like the square GAN of 9 or whatever, brain damage sets in. Let's continue.
Yeah. All right. So again, our one-page summary approach. Give me a compelling price pattern. We teach that. I use little, Johnny as an example. I told Greg that we need to have one of these MT lives on. I will teach an eighth grader how to trade and outperform the broader markets. So we will tell you what a compelling picture looks like. We'll tell you how to define a trend. We'll tell you what support and resistance is. Because remember, we're looking for this picture and overlaying these other concepts to decide, I got a high probability trade and I'm ready to hit the button to enter long or short. Relative strength or weakness, volume moving average. We've done MT lives on every topic you can imagine, and that's what we do. What are the broader markets doing, and in the sectors, market internals, and this is key. Obviously, Greg often says this should be up top. If you don't have a trading plan, a business plan, a money management, trader psychology, which means you have the ability to follow your systematic objective method and have the patience to not trade when things don't line up. So that's trading. Actually, Greg, you were talking to McGraw this morning pre-market on his approach. So it's actually a derivative of today's topic. But McGraw, I remember, is the one that sent this to me. And let's read it, because that's today's session. And it also has to do with human emotion. Learn secret oscillator settings. Got 1,000 people lined up. Learn how to manage risk. And, we could also add on there, Greg, say objective price analysis. And why do I say human emotion? Well, I'll tell you why. And I should have underlined this word secret, actually, because people, they want the quick, easy road to success. They want to take the pill to lose weight and not have to have a diet or go to the gym. And they want the same in the stock market. They want somebody to give them a red light, green light system through these complicated oscillators, etc. So this is just a breakdown of the other slide, really. We have a techno-fundamental approach, which price action, market internals, intermarket analysis. And for anybody who suggests that technical analysis doesn't work, well, guess what? I learned in my graduate statistics class that you only need a statistically minimum sample is 30. Well, guess what? We've been at this 30 years and we have 85% success rate. So that's tens of thousands of trades. So our approach works. It's not a coin flip. You can't argue with it. So Greg, this is just kind of a takeoff, a real example of what you were saying a few moments ago. Let me just kind of highlight it. This was an email to you. Okay. I'm risk adverse. I'm trying to, do some advanced option trades. I use Bollinger Bands, linear regression, MACD, Heiken-Ashi, if I'm pronouncing it right, blah, blah, blah. But but I have not been successful. Do you want to? I've tried different settings. That's what you said. So now all this is about tweaking it. And so this is your continued response. Indicators mind numbing until you understand it's all based on price action. Options are different. It's just a real life example, but go ahead and focus on these two red boxes because that's you talking.
1 second, I'm answering. I can talk. BC said bar by bar is only for short term. No, it's not. However, you could use it on a 1 minute chart, but it would be foolish to do that unless you got a bias from a higher time frame. So multiple time frame analysis is a key point. It's a big deal. I mean, many get gravitated toward smaller time frames and get chopped to death. And bar by bar analysis could make you crazy if, on a short term basis, if you weren't utilizing it with a bias from a higher time frame. But it's a whole nother subject, right? So what am I? You're
Just
still caught up finding a secret in the markets. Okay, that was my response. Things are in a complex.
right. So the two red things and add whatever you want.
Anything other than focusing directly on what moves the price action. Right. So that's where someone had posted in there about a MACD. I said, EC said MACD and indicators are used to confirm and not predict. No, they can't confirm anything. They can't confirm anything. Right? You're trying to say the tail wags the dog. Right? Price action dictates the direction of any indicator. Indicators cannot lead, right? They cannot predict the price action. If you utilize basic information, is the trend up, down, or sideways? If the trend is up, we assume it's going to continue to go up. Down, down. Sideways is chop. And so now reading that information, right? You start getting into, right? If the trend is up and the oscillator says, oh, it's overbought. Bullshit. It's going up. And if there's no resistance to the left, odds are it's going to keep going up until it fails for some reason. Now, yes, we have ways of looking at slowing momentum, which would be something that displays a bearish divergence with an indicator. But once you learn to read price action, you don't need any of that stuff. And actually putting those things on the chart, which you have been led to believe can predict, is actually the trap. So the essence of technical analysis, however you're using it, is to create a belief system. And I have to believe XYZ will do this for some reason. Now, how you create that belief system is either going to be a black hole, indicator-based methodology, or you're going to have clarity to it. And that clarity will also dictate to you, this is not how you want to look at things, and the time frames that you look at are going to tell you, this is not the picture that I recognize of an opportunity. So don't try and struggle with that, just move on. So, as I said, the indicators cannot do anything, right, where they're going to tell you what price is going to do. You want me to do this one too, Dan?
Yeah, because you just, we're doing our layer approach, and then yeah.
Yeah. So look, to do anything professionally with some consistency, you have to have confidence in what you're doing. So look, you want to be an accountant, you learn how to add 2 + 2 = 4. And I'm simplifying. But as with the markets, you have to have something that you can have confidence in. And if you can't look at IBM with the same confidence as Bitcoin, because of how you're interpreting the information, you're not going to have confidence. And if you think, hey, my indicator worked here, but why isn't it working today? You're not going to have confidence. So once you've created this belief system that you believe works, right? And you understand that the markets on a day-to-day basis can be random, right? One day the market could be like happy mood, bull market, and I'm talking intraday, and the next day bear market. And it's like, how the hell does that happen? Well, that's just how things operate in this profession. So you have to have that level of understanding that things can change. Now, as you go out to higher time frames, things don't change so fast. That's good. So as a swing trader and an investor, things don't change so quickly, which agrees with most people, because the faster things change, the more you have to have the ability to change with it, and that you have to grow into that as a trader, because you're dealing with something new. So once you do that, you have confidence in what you've learned, right? You have to learn first. Then you have to learn that things don't set up based on what you've learned that you have confidence in every single day. Sometimes they do, sometimes they don't. It could be feast or famine. So now, as you've learned that, now if you break the rules, you get punished. It's painful. You lose money. So after a little while, you gain the discipline to have the patience to wait for the pitch, so to speak, that you have confidence in. And there are going to be times where you have to sit on your hands. We call that SOH. And this is how you do it. You first have to learn the basics, the foundation. You have to test it, so to speak, looking back and say, oh, I see how that worked. I see how that worked. Oh, yeah. Why didn't it work here? Why didn't it work there? And okay, that isn't really the setup. Or sometimes the markets just get crazy. And that's why, of course, you have a stop loss. So once you get to that point where, you have that foundational information, right? And you gain patience, you gain discipline through this, you know, objective, not, uh, esoteric information, subjective information. You'll sit on your hands and you wait for things to happen. And so I call it, you're building a thought process. And that's what we call in the course thought building lessons. You're learning how to think, and you're putting together a belief system that tells you buy, sell, do nothing. So these are words that I suggest you eliminate from your vocabulary, right? And look, words are like a spell, right? If I use certain words, it's going to make you think certain things or not. So when I say overbought, most of us are going to think, oh, that can't go up further. It's overbought.
Good
And
answer.
then you see it go up. It's like, what the hell? I must have the wrong settings on that indicator. That webinar I went to where they used a 12-3-5 stochastic, right? That didn't work. I need to spend money and buy the optimized ones that work. It's
Right.
bullshit, right? Right? If something's going up, it continues to go up until it violates the trend, and it goes down until it violates the downtrend. So overbought and oversold, remove them from your vocabulary.
And so this actually, I think, is the best example of, not going to go through every one of these. So this is, we call this bullish price action above the 20. I'm now talking like master trader. So we had a red bar ignored. It's just chopping. It's chopping, 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 chopping. It's cleared. I got a closing breakout. And your oscillator stochastics is saying, I'm not an expert in it, but I think it's saying danger, danger. Get ready to short it. Whereas to us, that's a bullish inside bar with a price void. I'd be looking to buy this over the high of the red bar. So this is giving me incorrect information.
And so, just to add to what you're saying, Dan, it's like somebody might say, well, why did this one work?
Right.
Well, you could see this, what we call a rounding kind of a top and a little breakout failure.
Mm-hmm.
So price action displays what people are thinking. So this was strong, This is what we call a bottoming tail bar, which creates a thought it should continue to go higher. Why did it fail on that day? I can't say why it failed on that day. There are probably reasons related to that particular day why that failed, um, but it failed. And that shakes the confidence. And so now, as it breaks lower, people begin to sell. And when people begin to sell, this goes down. Now, if you change the settings, if you change this won't go down so fast. So you try to match this, right? Optimize these settings to fit this chart. But when you change to something else, some other symbol, now this doesn't work. So now you start changing it again. Just becomes a spiral into the abyss.
I tell them how to get out of the abyss.
You learn, right? So this is what I call the full MTS course that incorporates money management, intermarket analysis, market internals, intraday, end of day, gaps, trader psychology, keeping a trading journal, everything you could possibly need. And so I created this course, years ago. And, you know, many have taken it. My past students from my prior company have taken it. But the pricing today is, you'll never see it again. I shouldn't say never see it again. Things repeat. But if you check it out and at that, I'll find the link, mastertrader.com, MTS 1000, you'll see a discount code there. And, you'll see the prices. I wouldn't know about giving it away, but it's incredibly low compared to what it normally sells for. And if you want to learn and consume a course that is just over 16 hours long and over 50 modules, because I put everything into it, um, be trying to eat like one of those 6-foot sandwiches, right? It's not, you can listen to it over the course of a weekend, but it'll be a lot, but you get to watch it over and over and over again, right? So many we tell, listen to 20 minutes, right? Digest it. Go look at some charts. Come back and watch another 20 minutes. Go into the next section and then wash, repeat, repetition. And so you have access to the court for 24/7 forever. And so you can go back and reinforce it, because we need reinforcement of what we know as traders. Market environments change. This will teach you how to measure the market environment and find different opportunities. But as market environments change, sometimes we can get off track. Let me make an analogy to like an AA meeting, right? You're thinking about having that drink or your drug of choice, and you got to call your sponsor. Well, MTS is your sponsor. Go and listen to that freaking course again, or a section of it, and get back on track.
That's funny. All right, so I don't even know what this is. All right, we got a MACD
I
history.
don't know. Something I made. I just decided to,
What?
overlay some stuff.
Yeah. This is some type of cloud that's trying, to come up with indicator salesman, trying to sell you something. But yeah, I don't know how to use it, but just it's noise to me. Get rid of it, and I'll tell you how to trade price.
So it's some type of a thing to try and display trend and volatility. I'm just remembering when I made this thing at Bollinger Bands and something else. And so what you learn is through MTS is how to understand contracting volatility without indicators, or expanding volatility, or when that volatility is likely to expand, and then expand in what direction, and how far might it be able to go. So all of these different concepts that you saw on the beginning slide, all of those things, concepts come together to guide you in your thought process.
Uh, yeah. All right, so we have our live trading room. We start at 9 a.m. pre-market prep. Greg looks at the markets and our market analysis. I look at open trades, gap trades, stocks, our hit list for the morning. It's ongoing education. So these empty lives, we give great education. We're looking at these slides. In a few minutes, we'll look at real charts to try to give real insight on some setups. But this is where we trade in real time. It's not looking at past, well, it is looking at past charts, but we're making decisions in real time. So, check it out. This is 2-for-1 month and a couple other discounts there. Now let's talk about trend lines for a little bit. So people think they draw this straight line into the future, connecting some type of bars or pivots, and they think that that's going to magically not only project the future, but project a trend change. And this one, we actually grabbed this CNBC, or I forget what it was.
Doesn't matter.
What's that? I think they said this
Yeah,
broke the uptrend,
yeah.
and yeah,
Probably. I mean, they always say things like that, and the guy draws with his finger there, and
right,
and then a month later, they're connecting different dots and stuff. But
right.
you
So
know, I looked up years ago, where did this whole concept come from? And if I'm remembering and thinking right, but do you have any idea where this concept come from, Dan, of connecting dots and where things might go?
I honestly don't. I read Edwards and McGee, and I don't
I
remember.
believe it was related to bombing, meaning like
No idea.
a bomber would connect these things and project that where the bomb would go.
I never heard that before.
I
Okay.
read it somewhere years ago. And so this, of connecting dots. And so this is my true experience in that, I saw someone using it whenever I read it, and it's like, okay, here's the break. It's violated the trend. And the same thing, I saw the same thing. It's like, what the hell? How did it go back up again after it violated this line? And when you think about this, it's like if I connect these dots and I project it into the future, that's now going to be support or resistance. Come on. I mean, it's really like snake oil salesman stuff. And so it the point being, if it has pivots, this chart doesn't have pivots. I don't know if you have something in there with pivots, Dan, but
I do.
okay. So higher highs and higher lows.
Oh, here, you do it right now. Here it is.
All right. So here's how we do it. All right. Higher highs and higher lows. High, low, high. All right. So if you have higher highs and higher lows, we call this major support, a pivot low prior to a higher high. And you connect the pivots every time prices break through major support, it'll violate the trend line. Without a doubt, you can bet your life on it, right? Like that. So you don't need trend lines. And the whole thought of, oh, once the line is broken, it's going to become resistance. It's ridiculous.
All right.
And you see prices, break just like you were shown in that prior thing, and it goes back up. You start questioning yourself that you're the one doing it wrong, right? Everybody else can't be wrong. The guy on CNBC can't be wrong because they're all doing the same thing, but they've all learned to do this. Like I did make the analogy of a used car salesman. Not that there aren't good used car salesmen out there, but they're selling old stuff that there's things wrong with. And so to make a living, they have to continue to sell that old stuff, even if it's broken, but they polish it up with a fancy word game. And so the guy on CNBC also knows that he drew the line on XYZ 3 months ago and it broke. And now he's talking about it going up, but he's now drawn the line in a different way to connect new dots.
Exactly.
He just hasn't figured out what he's doing doesn't work, or he sees it doesn't work, but he can't change it because he doesn't know what to do. And we're all in that place that we don't know what to do until we stop doing it and start watching the price action.
So here's I'm on this some Facebook. Um, they keep feeding me these things, and I just grabbed this right before today's show. So it's rig tea. So I'm showing you what this is what this guy shows on Facebook, trying to whatever his motivation is. Get ready for rig tea. So look, you got all I have no idea what all these are, but I don't care. But look, we're talking about trend lines right now. So for some reason, he's implying that when this breaks through this trend line, that it's going to rip. Now here's our clean version. We have color-coded candlesticks, volume 20, 50, 200. We'll talk about moving averages here in a moment. So this trend line, I'm just eyeballing it here, is meaningless to our analysis of this. So this was a breakout. This is a deep retracement. This is a breakout that failed. Now it's consolidating at the rising 50. The 20 MA is flattening out, and we have an igniting breakout bar. So it is of interest to us. In fact, I sold some naked puts on it earlier today. So we are monitoring it, but this trend line and all this other stuff down here, you see, is meaningless to our analysis. And I'm sure I could find 100 other examples where he probably said, "Oh, look, it broke through this trend line," and I could show you the pictures. Like, that's a breakout failure. I'm ready to short the thing. So, just one example of people are pumping this, and this is our analysis.
Yeah. Some of them have enough indicators on there where you can't even see the price. They're all stacked up, but that's trying to find the holy grail. And if all these indicators are lined up, how could I be wrong?
Right.
You know,
Well, here's a picture for you right now.
can you say that word, Dan?
Each no.
Ichikumi. It's crazy. That's like the ultimate indicator that for trend analysis, support, resistance, where to buy, where to sell.
Where the hell is this trend line right here?
No, that's not a trend line. That's connecting this dot to this dot to make Fibonacci levels.
Oh, gotcha.
All
right.
So I just made that chart to kind of go to the point of being ridiculous, but
Right. Yeah, go ahead.
yeah. So I mean, I people sell courses on how to read the Ichikumi cloud, and you're just going down the same path of, just a different indicator, and they have, I don't know, like 10 different settings for it. Maybe I'm wrong on that, on how many of the settings there are, but you get my point. And so it's overlapping the prices. It's just a big mess. And you have to get to a point where you're just willing to take this garbage off the chart. And to address what, BC saying that nothing's 100%, but you think before you can master, like Greg and Dan, an indicator like MACD can help with some sort of expectancy. Well, I hear what you're saying, BC, but by being here today and you're able to question your MACD, hopefully, by continuing to use the MACD, once you've been exposed to what we're talking about today, you're just lengthening the time to where you're really going to be able to learn how to read the price action, right? So you might say, well, we use a couple of moving averages to speed up the analysis. But if you can learn to read the price action, right, on a very basic way, you find the MACD is useless. It can actually be misleading.
Yeah, so that's what Greg was
Let me,
starting to say here. We use moving averages, as he said, to speed up the analysis. We can read what's going on just by looking at the angle and the arrangement of them, but we are always trading price action. These can become self-fulfilling prophecies when enough people buy at them. I'm going to show you a chart on this crossover in a moment. But a moving average in and of itself or a crossover is meaningless without prices. So here's one moving average crossover. So which one are you showing here, Greg? This is just crazy bottoming action.
it's a 20. I believe it's a 20 and a 50.
No, of course it is. But I mean, which one are you saying gives delayed action here? I don't know. This thing's a mess. Let's go to
be delayed.
let's go to this one because it's current. The spiders. I grabbed this one yesterday. So let's talk about what the media loves to talk about. So again, our very clean daily chart. This was the Liberation Day tariff sell-off, came very close to a quick bear market. And the blue is 20, green is 50, red is 200. So we, in an MT live and in Greg's course, we could take the candles off and have an educated guess of what's going on under the hood. So the media says, hey, when the 50 crosses below the 200, it's time to get bearish in the market, start shorting. So look at this. This was at the dead low, called the death cross. An amazing rebound, bullish price action here, gap coming out of a base. And now the golden cross, as they call it, when the 50 crosses through the 200, they say buy. Again, those are meaningless without looking at price action. You can see how you would have shorted the dead low on this. Whereas regardless of these moving averages, this was an igniting gap breakout where in all three of our advisory letters, we've been bullish as can be. This is a holiday week. We're kind of getting this melt up scenario until the market internals get cooked. And then, so Greg, that just went to panelists.
What, Dan?
What you typed there? Oh, the one you are talking to me. Never mind.
Oh, shoot. I'm on host and panelists. Huh?
Right. So that's it. So it's another example. We've been talking about we've been talking about things that are subjective today, not price action. Oscillators, trend lines. Now we're talking about moving averages. But we teach how to use moving averages to read the alignment of the three trends, contraction, expansion, but it's always price action. Just one example here of what I just said, and then Greg will pull up his charts as always. We always like to save time for that. So I took the candles off.
And so, we always get into too much, Dan, but so people understand why we even use these moving averages. And so the 20 is a short-term moving average by definition, right? So it follows the price action closer or tighter. All right, so this is pointing down. Right, the 50 is equal to the 10 on the weekly time frame. Right, the 10, yeah, it's equal to the 10 on the weekly time frame. So, and the 200 is equal to the 10 on the monthly time frame. What does this tell me when I look at these moving averages without looking at all those time frames? There's a convergence of these time frames coming together. And so the price action is probably whippy because it came down hard, it went up hard, kind of like what the broader markets did, right? The beginning of the year and April and up and down. And so things are now getting tighter. They're getting tight. So what does that mean? It means that those that are using the monthly time frame, those that are using the weekly time frame, and those that are using the daily time frame, all of those analyses and thought processes are coming together at an inflection point where things are probably getting ready, hopefully, to move. Right? So they were getting crazy. Is that the chart, Dan?
Yep. So now tell me where the no-brainer trading action is.
Okay, so here was the move down, right? The moving averages had to follow, right? Because they were steep pointing down. And then here they flattened out. So the price action must have stabilized in some way. Then it went up sharply. It went up and come back down again. And so here's this convergence of moving averages together. Now, I look at something like this and I look at that pattern and it's like, all right, it tried to go up at this point and it failed and it broke down. And this is what we call a bearish 1, 2, 3. All right, wide range bar down, inside bar. The inside bar is a little consolidation, and now it's got room to fall. Well, it might stop there. I don't think so. After it attempts, see, when we look at charts, we look at that from the point of view it's displaying what others think. So clearly, everybody thought it was going to go down, and they were right. Then it began to stabilize. It went sideways. And it's like, I'm not so sure it's going down. Now it starts going up and it pulls back and it's going up. And I think it's going to continue to go up because it's going up. But I got to look to the left. It's coming to resistance. So as it pulls back here and begins to bottom out, the converging, it's like, maybe it'll go up. Well, I don't know. I have to wait. It broke down. Now it communicates it's going to go down. And so now you short it under the 1, 2, 3, or you do a call spread, or you buy a put if it's liquid, or a debit spread. There's different ways. But at that point, we're looking for it to go down.
Yep. And then this is just a little screenshot of Greg's scan on TC2000. So for our subscribers, any one of our subscribers to any product, Greg shares his scans with you, which are amazing. And that's where I found this thing. Look, negative 1, 2, 3. That's what it's called, a bear 1, 2, 3. And here's JHG right there. And I put it into a Telegram alert, send it to subscribers, and then we manage in between. So we could, Greg mentioned buy put, debit spread, etc. We have a technical based approach to trading options. So we need a bias. So you need to start with Greg's technical course. You get a bias, and then I teach you through this comprehensive course all the combinations to make money on your bias. When you buy or sell a stock, I call that one dimensional. You make money if you're long, short, you make money if it goes down. We make money in many multiple ways buying or selling options with the combination of these strategies. So this is the similar discount on my comprehensive course. And now we're ready to look at real charts, answer questions, see if we can find some setups.
Interesting. 1 second, Dan. I'm going to just make sure to fix that code there as well.
And then this is Greg's course if you want to on both of these, obviously, you can read. We have all the detailed modules and description on the website. Sure, BC. Yeah,
Oh,
we'll take a look at anything. Absolutely. We're in
yeah,
Target.
Siegfried, if it accepted the coupon code, which you say it did, the site won't stop the credit card from working. It doesn't have the ability to do that because the website Master Trader does not control anything as far as the processing. Once you press the button, it goes to what's called authorized.net, which controls probably all credit cards all over the country or the world. So it won't decline it. But email me and I can see what it says, but it always says, ask the customer to contact their credit card provider. Did you add anything to it? I mean, I'm looking at the checkout. Let me look at this. Yeah. If you added the swing trading course and or anything to that, yes, yes, first. If you added it and it went over the price of that, it shouldn't, it may want authorization, which I don't want to, we don't have time, but believe me, just email me. We'll get it fixed.
Yeah,
100%. Yeah. And the swing trading course, you see that checkout. If you want to add the swing trading course, which the full MTS course covers swing trading, but not only is it half the price, let me just check this, Dan. It's like, I don't think the code would, yeah. It's half the price of the swing course that's on the site. If you add it at that checkout, um, it'll, of course, the price goes up, but it adds that. And then, because there are scammers out there is a limit that has to be authorized. Yeah, just do that. All right, so let's look at some charts and let's see if I can convince BC about MACD indicators. About so so in this chart, which has been in the news lately, Robinhood. I'll put a MACD on here just for conversation's sake. But here's a stock that I imagine the MACD gave a divergence here down at the low, and then it curled up and gave a buy signal here. So this wasn't an uptrend. It gapped up on earnings. That's what that E is, on earnings. And then it moved down. It broke down lower. And so retracements are one of the concepts. It retraced 100%. And then it had what we call bullish price action at resistance. So this is a bottoming pattern. And so down, price correction, time correction, and then this was called an igniting gap. Let's clean this up. This is an igniting gap. And so at that point, you apply the trend. The 20 is up, the 50 is up, the 200 is up. You see here, it bottomed out at the 200. Maybe there's something to the left. There's some support there. We can take a look. Let's do this. Right, why did it bottom out there? There's either support there or the market may be bottomed. We see that was in April. And so there's a shelf here that was resistance, and it broke out above that. Right? What was resistance becomes support. Down here, you got a wide range bar. Here you got, this is called a wide range bar igniting. Now, I have no idea what a MACD it would look like exactly, but if we put that on here, and I have to find MACD, all right? Should have one in here. indicators.
Greg, the last time we looked, wasn't there like 196 oscillators to pick from? I'm sure there's more now.
Oh yeah. I mean, this platform doesn't have that many. Where the hell? It's got to have a MACD.
Of course it does. Has
Uh,
to. That's basic. Maybe they call it something different for some reason.
possible. You see how much I use MACD indicators? Indicators. That doesn't make sense. I know it had it. I don't know. Should be here with the M's, right? Yeah, MACD. MACD. And an MACD histogram. I don't know why that wasn't there. Scale it by itself. Anyway, let's do, this is why it's all brain damage. Indicator. MACD histogram, probably better. Well, not really. But anyway, there's the divergence. I said to you, it probably has a divergence. And you can see here, right, lower, made a lower low. This made a higher low. How did I know that? Because of the way prices were moving. This was moving down faster. This moved down slower. And then it made a turn. So there had to be some kind of a divergence. And if it wasn't, I could have changed the settings and I could have made it look like whatever you wanted it to look like. And so here it goes positive. And now it's above the zero line because the what is it? 12 and the 26. The 12 is now above the 26. That's all this is. It's the difference between these two exponential moving averages. If the 12 is above the 26, this will be above zero. Right? If it's below, the 12 is below the 26, this will be below zero. So all you're looking at is two moving averages and the difference between the two of them. Now, you could put those moving averages on your chart. Here, pull this up.
But Greg, look what I typed. I mean, look at all the negative signals MACD gave to get you out of your long.
Yeah, I mean, it's just useless. I mean, maybe that's overpowering the word to make my point, but
Actually, give me a screenshot of that. I'll put it in the file because that was a perfect example of MACD would have said you're overbought.
well, I don't know that MACD says something is overbought because it's a trend following type of indicator. And
Okay.
I don't know, Dan,
All
but
right.
look, you got that trade station. That's got more indicators than anything in the world, right? But we don't look at things as being overbought, right? As mentioned. But do they get extended? What does extended mean? It means that the prices are beginning to move more rapidly. They get far from support. They get far from the 20 MA. So getting far from support of the 20 MA from a bottoming pattern, it's supposed to. Whereas now, look at how it was moving up in a controlled way next to the moving average. Now it's accelerating. That doesn't mean it can't continue to go up, but the further it goes up, it means that more and more people that bought down here, here, here are going to be inclined to sell. Or those that are going to buy are going to say, well, it's far. Or if they're looking at overbought, they're going to say, I got to wait for my indicator to get oversold. But the further it goes up here, the greater the probability of falling further because those that are looking at support areas, it's down here. So the potential to fall further becomes greater because this is where the buyers are. FT saying RSI stochastics above 80. Yeah, so there's different indicators. Is something overbought? Is it oversold? But again, as you start to apply MTS, it doesn't matter. It all applies the same way. This stock is erratic, but it's bottomed out. If it can clear these highs, I believe it'll go up.
125, sure.
It hasn't happened yet, but you just click here and set an alert and let the computer watch it, right? Pan W, right? This violated this dot. Well, if you're drawing trend lines, oh my goodness, it broke the trend line, but it kept going up. You must have drawn it wrong, right? I mean, this is what happens. Where's my trend line thing here? Here, if I connect here to here, maybe I can grab this. And now we do this. Oh, it broke the trend line, right? But it kept going up. So now you're back in the same thing. I connect here. Oh, now it's drawn the right way. It broke the trend line. But see, it violated this major support point. It has to break the trend line. It has to. So look, folks, there's a lot of information. This is like a college education. And so you didn't go to college, you took 4 years. You can watch the whole MTS course or the full options course in a weekend. But to assimilate it, you need to watch it over multiple times. You need to ask questions, which Dan and I are available through email. We do coaching sessions. They're recorded if you can't make it, so you can watch the coaching session again. And yeah, does it works on all time frames. It's universal, but you need to learn how to utilize multiple time frames. Are you a swing trader? Are you an intraday trader? Don't mix them up. Right? Anyway, happy 4th of July. We'll be back next week. Next week, we're really going to give you some brain damage. We're going to be talking about gamma walls with Trader McGraw. It'll be fun. Join us next Wednesday. We'll talk then. Bye-bye.